Hi folks, welcome back. We have our entire research team joining in now to help us prep for the day and so many stocks to talk about. So let's get Reema first on board to tell us why she's watching Bharti this morning. Reema, how did the numbers look?
Well, at the operational level, it's bang in line with street expectations. The company's reported a consolidated revenue growth of 3.7%, a little bit of a margin improvement of 60-70 basis points. But the bottom line, the profits have declined by 26% on a quarter-on-quarter basis, missing street expectations, and that's because of an exceptional charge of 670 crore, which pertains to some license fees that they had to pay for their D2H business. But if you strip that out, operational numbers are in line. Now remember, Bharti Airtel is a combination of the Africa business, which is 30% of revenues and EBITDA, and the balance is their India business. Majority of it comes in from the mobile services, the connectivity service. The balance is their D2H business. They've got a little bit of enterprise business as well. So let's talk about the mobile business, which is directly comparable with Jio as well as Vodafone Idea. Now here, Bharti Airtel's India mobile business performance is very similar to Reliance Jio. Bharti reported a 2.1% growth quarter-on-quarter in the India mobile revenues, exactly the same as Reliance Jio. Both the companies had reported a margin expansion. For Bharti Airtel, the margin expansion stands at 140 basis points. Where Bharti Airtel has done well compared to expectation is the subscriber growth. The subscriber growth at 4.4 million on a quarter-on-quarter basis is the highest that we've seen in the last 7 quarters. The 4G subscriber addition is good, and the ARPU expansion continues for yet another quarter. On the whole, in line with expectations, a steady performance. There are no positive surprises, but there is a bit of a miss on the bottom line. Back to you.
Okay, thanks a lot for that miss on the bottom line. Well, for Hero MotoCorp, the numbers came in post-market hours yesterday. I'm going with red because when the numbers were nothing exceptional. In fact, they were weak, largely in line with expectations. The margins were down 70 basis points year on year, coming in at 11.5%. And in fact, this is the 4th consecutive quarter of sub 12% margins for Hero MotoCorp. So they have been facing a lot of margin pressures in the quarters gone by. The revenue growth was barely about 2%, in fact, sub 2% on a year-on-year basis at 8,031 crores. As I said, the core EBITDA has also fallen, about 3.7%, margins under pressure, and the profit growth of just about 6.3% is what we've seen. The company, of course, in their press release mentioned that they are expecting a recovery in market share aided by new launches in the premium segment over the next few quarters, but that is still hope. For now, the numbers have been lackluster, and we've been seeing it in the stock as well. The stock has done nothing for investors, absolutely range-bound in the last 2 years. So, I'm going with red over there.
Okay, all right. Red on Hero MotoCorp, though the commentary was positive. Interesting. Yesterday, there were a couple of auto ancillary companies. On their con call, they sounded rather cautious, actually. So it's split down the middle, I'm guessing, in terms of commentary going ahead. But let's hop across to Vivek. He joins in to tell us about Adani Green. Morning, Vivek.
Well, good morning. Adani Green, declared its results just prior to market close yesterday. While the revenues were quite strong, coming in almost 40% higher, closer to the 1,973 crore mark. The EBITDA, overall EBITDA fell almost 18% on a year-on-year basis. However, the silver lining was the power supply EBITDA did grow quite significantly on a year-on-year basis. Margins were quite muted, coming in close to the 43% mark, while profitability jumped up, almost doubled on a year-on-year basis, a little over the 100 crore mark. Now, a couple of key points to keep an eye out for. Operational capacity, for the 9 months is up almost 35% on a year-on-year basis, closer to the 7,324 megawatts. And the company says that they will complete 8,300 megawatt by the end of FY23. And also the other thing to keep an eye out for, even Adani Green, in line with Adani Group companies, other Adani Group companies have said that they will be appointing an independent auditor to do a complete assessment of all of the transactions that have been taken so far.
All right, Vivek, thanks very much for that. This is Adani Green in focus. Well, Astral is the next one we're going to talk about. Sonal is here with more. Sonal, morning.
Good morning, Prashant. Well, Astral Limited numbers on a YY basis were lower as expected because of the lower PVC prices that we saw. So revenues are up 15%, but EBITDA declined by 10%, leading to a margin compression of 400 basis points to come in at 14.5%. Profits also accordingly were down 26%. However, margins are up on a quarter-on-quarter basis at 14.5% versus 13.7%. So that has come in as a relief. The plumbing business saw a decline of 400 basis points in terms of margins. The paints and adhesives business saw around 200 basis points decline in terms of margins. However, now PVC prices, they have increased, and the management commentary also looks positive as far as demand and pricing is concerned. So the stock could see some red but will recover in the later trade.
All right, thanks a lot for that. That's pipe manufacturer Astral. Let's see what happens with that stock. But Credit Access Grameen is the other one we're looking at. Abhishek is here to tell us why he's watching that. Abhishek, good morning.
Good morning, Sonia. So it's an operationally strong quarter which continues for Credit Access Grameen. Disbursements are up 2.76% YOY and about 11% sequentially. The AM growth is strong, about 22% YOY and 7.5% sequentially. The best part of the result is that they have seen customer acquisition this time around. So customer base has grown by 5.5% YOY and about 3.7% sequentially. The customer base overall is at 10-quarter high. Asset quality has improved, led by the fact that write-offs continue to remain elevated. Net interest margin has come down slightly by 10 basis points quarter-on-quarter, but no taking away from the fact that P&L is strong. NII growth of 30.3% YOY and about 8.5% quarter-on-quarter. The PAT is up more than 85% YOY and about 23% on a sequential basis. Back to you.
Okay, all right. Thanks for that, Abhishek. Well, going back to Vivek. Vivek, you're tracking Thermax and NHPC. How are those numbers?
Thermax, it's a positive surprise from the company this time around. Good set of results. Revenues up almost 27% on a year-on-year basis. EBITDA, core EBITDA is up almost 42%, and margins too coming in quite strong at 7.9% versus 7% last time around. Profitability is up 60%. Key highlight being the fact that, strong revenue growth seen across all of the segments. In fact, the chemical segment saw the best growth. Now, the other important thing to keep an eye out for, at the end of Q2, management had actually guided for a flat order inflow. However, order inflow was up quite significantly, giving a bit of a beat. In fact, my query says that the margins as well as the order inflows were the key positives this quarter for Thermax. Now, coming to NHPC, overall there was strong growth. However, there was an impact on the profitability. Revenues up almost 20% on a year-on-year basis. Margins coming in at 66%, while profitability was down almost 17% again on a year-on-year basis. Key thing to watch out for in NHPC, the company has almost 7.5 gigawatt worth of projects which are expected to be commissioned soon, and the timeline of these commissions, especially for the lower Subansiri project, will be something key to track out for.
Okay, thanks a lot, Vivek, for that. Plenty of stocks in the specialty chemical space. Navin Fluorine, Deepak Nitrite, GNFC, and our expert is here with us. Sonal, what's the takeaway from all the numbers?
Well, it's a mixed set here. Let me start with the strong one, Navin Fluorine. It was a top-down beat and growth was seen across all the segments. So revenues were up 48% at 563 crore rupees versus estimates of 514 crore rupees. Gross margins were up 70 basis points at 56.3%. EBITDA of 58%. Margins have come in at 27.6% versus an expectation of 26.5%. And profits are also up 55%. And it was led by growth across all the segments. So see a green on this stock. Deepak Nitrite, well, numbers were slightly lower than what IIFL was estimating. So revenues did see an increase of 16%, but EBITDA was down 10.5%. Margins declined 500 basis points, and profits were down 14% as well. However, if we look at this segment, so advanced intermediates, EBIT was flat. Phenolics was down on a YOY basis, but there was an increase on a quarter-on-quarter basis in the phenolics division. So that is a positive. GNFC, weak set, revenues up 12%. However, it was a margin miss. EBITDA down 35%, margins down 1,200 basis points at 16%, leading to a profit decline of 40%. Expect that stock to be in the red today.
Okay, thanks a lot for that. So those are plenty of stocks to focus on, and we'll, of course, keep revisiting them through the course of the next 2 hours. We'll get some guests in as well. Let's do a quick recap. Stocks with positive news flow. There's Credit Access Grameen, there's Thermax, and Navin Fluorine. So 3 stocks with positive news flow. While on the negative side, there's Bharti, Hero MotoCorp, Adani Green, Astral, NHPC, Deepak Nitrite, and GNFC. But another really important internal to track this morning is the way Brent crude has been moving. There was a sharp 3% surge in Brent crude overnight. Brent is now almost at $84 a barrel. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Sonia, thank you for that. Well, yes, very volatile moves continue in case of the crude oil prices. So apart from the dollar index coming off from its highs of 104 to almost 103 has been supportive across asset classes. For crude, it also has been about the fact that the Saudi Arabia has increased prices for its Asia consumers for the first time in 6 months as they see demand coming back. Also, Turkey Ceyhan terminal will reopen today post-earthquake, but the markets do believe that it would only be partial and there are supply concerns now coming in from Syria and Turkey both. And then the likelihood likelihood of strong Chinese demand continuing has been supportive. Markets also are looking at the fact that you are looking at the U.S. crude inventory seeing a decline by 2 million barrels in the previous week. We have seen strong gains come back for natural gas. That one gained by 5% overnight. The coal prices also are off one-year lows as the Chinese demand comes back into the market. It is also about the Powell testimony saying that the rates will likely to continue, but this inflation seems to be coming in, is really supportive across commodities. So whether it's precious metals, rubber, biofuels, all of that seems to be trading in positive.
All right, Manisha, thanks very much for that. Take a quick break here. Devin Choksi of KR Choksi will be joining in to talk stocks. We also will have the management of Kalyan Jewelers to discuss their third quarter results.